I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Rick, welcome back to the show.
Always a pleasure, Jim. Thanks for inviting me on.
The Dow, it seems, hits a record high every day now. What's behind that big leap in the Dow numbers? Is it as healthy as it appears?
I would say the primary driver of the markets here is mental illness on a mass scale. It's one thing, yeah, the economy's great guns. I don't even believe that really, because we've had the higher interest rates already pretty seriously impact housing and autos. So I think the market, or at least the analysts, are kind of navel gazing here. They're saying everything looks great simply because we've got great looking asset inflation here in the stock market. But yeah, I think it's mental illness at this point that's driving the market mostly.
Is it just a few stocks that are actually powering the Dow and the rest of them are kind of sluggish?
Yeah, that's no question. It took the Dow a long time to catch up with the S&Ps, the Russell, and the NASDAQ, simply because the Dow, by and large, is these stodgy old stocks that, companies that actually make things. Heaven forbid we should find ourselves in the business of manufacturing things, using raw materials and labor inputs and things like that. Better we should just have coders be able to create out of thin air the things that we sell and distribute. So yeah, the Dow's been a bit of a laggard here, and when you see the percentage of the rally with respect to the components of which these stocks are indexed, mainly Apple and Amazon, the rally is very, very narrowly focused. But it's been narrowing for quite some time, and as we find with so many other technical indicators and ideas that used to work as far as timing the market, we're in uncharted territory. It's like how narrow can the focus be, and eventually we're going to be left with just Amazon driving not just the U.S. market, but keeping the global market from looking even worse than it does.
Have Amazon, Google, Facebook reached the point where perhaps they should be broken up?
No, I don't think so, because not that Amazon is not in a position where it could conceivably have a monopoly on global retail. I mean, I think it's 50% of all web-based sales are through Amazon, and they're above 10%, I think, on total global sales of goods and services. So they've got not a monopoly, but certainly a stranglehold, unlike we've ever seen before. But when you break the companies up, you implicitly raise the question, well, who's going to do the breaking up? And I'm one of those guys who thinks I really wish that AT&T were still around. I get a feeling that my cell phone would do everything that it's doing, but better. And I know that's kind of old-fashioned, but the problem with breaking the companies up is that the regulators would do even worse by us than is being done by us now.
Yes, I remember when the telephone company here was a monopoly. They said quality was their primary concern, and you didn't have phone calls that faded out or cut off. And now they're just like everybody else. They're just going for the profit margin and screw quality.
That's true. It's like they don't really care about quality or service or anything like that. And we at least used to be able to talk to human beings in the AT&T era.
Well, And I've noticed too, I've had a number of very expensive household items that I ordered that didn't work when I got them. Quality for everything from electric reclining chairs to dishwashers and refrigerators doesn't mean anything.
Yeah, and you just, at this point, you just have to buy them from some vendor that stands behind them. Costco, you can take just about anything back, and they're really good about that. But you can see, another piece of that is that you can order whole foot lockers, steamer trunks full of clothing, and you're just instructed to send back all the stuff that you don't like. So that's certainly a different way of doing retail in the clothing business, but seems like there's a lot of waste there.
Do you think they're just hoping consumers will just capitulate, will give up?
Well, the threshold really for when are all these department stores, Nordstrom's, Macy's, when are they all going to give up the ghost? Well, the answer was when consumers no longer want to come into the stores and feel the merchandise, So this idea of sending them a whole Foot Locker full of clothing and saying, just send us back the stuff you don't want, it uses the the delivery system intensively, but apparently we've reached a point where that's no sweat for the, or almost literally, no skin off the back of the vendors themselves. So I'm just waiting literally for the other shoe to drop. That would be Nordstrom's, which kind of built its power initially from a shoe store. Shoes have always been their specialty, but they've got, and I guess so far they've weathered the competition from Zappos and some of the other online shoe purveyors. But it seems like, and they're getting better and better. We discovered in the last quarter that America is evidently so prosperous that people are going out and shopping. They're going to stores. So I don't know. It's the trend. I guess the news is don't give up on brick and mortar stores quite yet.
We'll have more with Rick Ackerman right after the break.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're speaking with Rick Ackerman. Continuing the rise in interest rates in the U.S., has that already hurt the economy?
No question. The same low interest rates that drive mortgages and home sales are impacting on the auto business. And the auto business is very exposed there because nobody buys cars anymore. We lease them, or leasing, like mortgages, gives us the ability to drive more car than we can afford. So the leases are subject to increases in the interest rate, and that's what's happening. Interest rates are rising, so leases are becoming more expensive. And at the same time, the automakers have pushed prices to a threshold where people who haven't bought cars in a while, they hear the prices and they want to, you could just about pass out. I could think the average price, or the mean price, is in the mid-30s. So for the moment, the used car market is taking some of the pressure off consumers, but used car prices are getting pushed higher too. So the rise in interest rates is definitely impacting on some key areas, namely housing and autos. And the Fed keeps pushing this not just an illusion, it's a delusion that the economy is quote-unquote strong enough to survive higher rates. When I look at rates on the 30-year, currently, let's call it 3.3%, 3.297%, I think they're headed to at least 3.485. And when you consider the size of the market, that's a big number. You know, you talk about a lot more interest being paid with that move to the target. So the Fed would say, "Oh, no sweat, the economy is going great guns. This will slow it down, but you won't even notice it." But you know, but it will. I mean, we're at the point now where it's already slowed it down, and as always, the Fed is into tighten. Just when signs are starting to appear that they may have to do some loosening.
Well, weren't they on an interest rate hike policy going into the last recession?
Well, they want to be in a position to be able to bring rates down, and so that's why they've been kind of blithely, pushing rates higher and making announcements more or less routinely that they aim to keep pushing them higher. I think it's really wrong to ascribe anything more than semi-intelligence to the Fed, the Fed board. They're simply being accommodated by a strong-looking economy, strong because the asset inflation has pushed the stock market to an all-time high. So the Fed is kind of saying, they're saying we can keep pushing rates higher because everything's going great guns, but the great guns part of it is really just an illusion fostered by the lower rates. So there's a catch-22 there, or let's say more succinctly, I'd say there's a disconnect there, and we're so far into the giddy side of the disconnect in the stock market that I'm thinking, well, hey, it's October. When are you guys going to start taking notice?
We'll have more with Rick Ackerman right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, is it true the steel tariffs the U.S. has imposed on Canada and China have already driven the price of a car up by $1,500?
Well, I think I remember reading that somewhere, and it's not hard to believe. The tariffs are pretty substantial. I think it was 10% on steel, 15% on aluminum, or maybe it was the reverse of that. But, that's a lot of bread. And, again, Wall Street doesn't seem to much care. For a while there, they had all of their automaker investment money earmarked for Tesla, but of course that game isn't working anymore. Tesla has just become a little bit too nutty to give the portfolio managers the kind of stability they used to enjoy with GE and Ford and Chrysler.
GM has just announced that it's going to team up with Honda to develop robot cars. Is that a smart move on their part, considering Japan has had massive robot involvement in their economy for the last 30 years?
I'm going to do that myself. I think everybody's doing it. I'm going to have a Rick Ackerman car, and I may be behind Apple in that line, but everybody's doing it. And in many instances, they're doing it just so they can throw around the catchword, driverless cars. I don't trust them really, and neither does anyone else enough to get in one and have it drive you around Pittsburgh with no adult supervision. I think it's partly because I think artificial intelligence is grossly overrated. It's like how are you going to trust your life to a driving algorithm and sensor system when the people who have brought us AI can't even give us good auto text. Auto text is, I think, to me, it's an indicator of where artificial intelligence really is, and it's got an IQ. My Android phone, when I'm trying to text a message just by verbalizing it, it's got an IQ of about 12. So I'm not really hot on the driverless car, although when cars from, let's say, the year 2020 on are retrofitted and we're all on auto drive, then it won't even be a very difficult driverless car. It won't be a difficult AI problem, because in effect we'll be like we're on some sort of roller coaster. We're on a roller coaster track.
It probably would be good on a set piece, or they're saying robot trucks on interstate highways or interprovincial highways probably will be the first thing out there, because it's a pretty simple system to navigate. But once you get into a city where you have conflicting signs, for example, or white lines on the road that lead straight into concrete barriers, that is one of the things that makes it a lot more difficult, isn't it?
Yeah, for sure. And when we read the proximal cause, the reports on why a couple of driverless car fatalities have occurred, I'm not reassured when the conclusion is, well, it's driver error. It was driver error in a driverless car, and so I'm really, it doesn't give me any confidence to see that they figured out that the idiot behind the wheel was at least part of the problem.
Right, because they chose to let the robot do the driving.
Yeah, and the reasons, when these cars do collide, and they give it, well, there was this big truck, and it was white on the outside, and the sensor read that as sunlight or something. Well, again, I'm not reassured.
How bad is the tariff war with China and the U.S., and could that be the extra apple on the cart that tips it over?
Well, the numbers are just getting bigger and bigger, and it's one thing for Trump and the U.S. of A. to say, hey, the economy's going so strong that even though we know a tariff war will have its costs, we can afford to pay those costs. And, in principle, I'm okay, or at least, let's say, tactically speaking, I'm not against tariffs. I mean, China has been playing a very sleazy game for so long. They're stealing all our intellectual property. They've required that American companies that do business in China have to give up a lot of their ideas, their technology, their patents. So China is about as corrupt and sleazy a player as we could possibly have in a trading partner. So I think that Trump, there's reasonable support really for some of these things that he's been doing. But he and everyone else is is able to acknowledge at this point that it really does cost us. And although we can bear the price in ostensibly good times, meaning with the stock market trading at record highs, if the economy should turn down, the costs of a tariff war would become unbearable.
China has said it won't negotiate with a knife to its throat. Could these tariffs backfire?
Yeah, I mean, 6 months ago I would have said, oh, it's just Trump playing poker and the Chinese will come around. But the suspicion is growing that they are playing as much hardball as we are. So they haven't really given an inch so far. And even the panel, the group that we put out a commission to kind of feel them out, they keep running aground. So there's no real evidence of progress in the tariff negotiations, and that's just one more thing that the stock market, now at record highs, seems to be ignoring at its great peril.
Should the U.S. back down on these tariffs before the Chinese just throw their hands up and say we're going to do something else and look for a different big trading partner? I
think that it's too late for that. there's nothing, at least in Trump's idea of how things work, that would be face-saving. We're not going to, and even at the practical level, putting aside Trump's poker playing, the question is, we'll back off in what way? We're already getting screwed to the wall by all of the agreements that we have with China. I mean, they take advantage of us in trade of pretty much everything. One of the few exceptions being soybeans. We have a bit of leverage there, but look what it's doing to our farm belt.
Speaking of farmers, we have a new North American trade deal. Is this good for business, or is it just the same deal with a different name?
The market certainly celebrated Canada's joining NAFTA, and I don't think it was totally unexpected that they were going to do that. I haven't really delved too deeply into the specifics of this new NAFTA agreement, but I saw it characterized in, I think it was the Wall Street Journal, as the best of a bunch of bad possible deals. So, I trust the Wall Street Journal up to a point, really, in their evaluation of tariffs. They're not exactly pro-tariff, but even on the op-ed page there, they've come around to the point of saying that China needs a little bit of a comeuppance to bring them around. So my sort of vague perception of the new NAFTA agreement was that it could have been worse. And if that's the most you can say about it, then the market ought not have celebrated so much yesterday, or today for that matter.
So the same point of view on both sides of the border here. Could have been worse.
Yeah.
Not a lot to celebrate then.
Right. No reason to get giddy.
Rick, thank you so much for chatting with us.
Well, it was a pleasure as always, Jim, and I'll look forward to our next conversation.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.